In Consumer Corner, we take a look at trends and products creating a buzz here in China. On today's show, we'll discuss China's new property control measures and compare them to property taxes in the U.S. On March 1st, China's State Council announced a new set of policies aimed at bringing down a fever in the country's housing markets. The measures include higher down payments on second homes and a 20% capital gains tax on the resale of homes. All of these seek to target what many analysts blame for the rampant rise in Chinese property prices: speculative purchases and the hoarding of houses as a means of preserving value. To understand these two, it's important to first understand the taxation structures in place, as well as the fundamentals of China's banking and finance system. China's system of financial repression through low interest rates provides the push, while tax-free property ownership and rising prices provides the pull. For wealthy Chinese with lots of cash to store, the Chinese financial system offers few viable alternatives. Bank deposits receive such low interest rates that money is usually losing real value due to inflation, and the country's stock and bond markets are too immature to provide reliable returns. This leaves China's rich with few choices when it comes to where to store their money and opens the door to the pull of real estate investment. China lacks a national property tax system, meaning holding property is virtually cost-free. In addition, constantly rising home prices have beat inflation and made housing not just a store of value, but also a good investment. This means that those with enough money can treat homes like bars of gold, buying them, stacking them, and then leaving them be for years or even decades. Several waves of real estate policy tweaks have looked to change this equation, making the purchase of more homes more difficult and more costly. Major cities imposed absolute restrictions on multiple home purchases. Shanghai and Chongqing piloted property taxes, and now the country will see taxes on the profits reaped from the resale of homes. Those restrictions have led many Chinese investors to look abroad for property investment opportunities. That may be good news for U.S. realtors, but many Chinese have been surprised to find American markets far less investment-friendly than initially thought. That's because Americans actually have to pay property taxes yearly, meaning the practice of holding homes empty is costly. Results from a 2011 American Community Survey found Americans spending 21% of their monthly income on mortgage payments, property taxes, and general upkeep. That upkeep is another factor many Chinese who buy apartments don't need to consider. Apartments in well-maintained buildings can essentially be left alone, while a freestanding American house requires consistent inspection and upkeep to prevent decay. Chinese media covering the moves to the U.S. quoted an American realtor on the higher costs of owning American property. Using the example of a $200,000 property, the realtor predicted home values would need to rise by 10 to 15% in just 1 year to justify the purchase and resale. If the price rise were less than that, then transaction and upkeep costs in that 1 year would swamp any potential gains. Other American regulations include capital gains taxes that are levied on profits from the resale of homes that aren't the owner's primary residence. In addition, bequeathing property to a child can come with more taxes that dwarf the minor deed taxes in China. When comparing American property taxes with the Chinese pilot programs, China once again looks like an easy place to hold property. Americans are usually taxed at 1 to 3% of the assessed value of their home, averaging $1,800 per household in 2011, according to the American Community Survey. In China's first stab at property taxes, the pilot programs in Shanghai and Chongqing both levied very low rates on a very limited scope of property. Attempts to target the taxes only at speculators and buyers of luxury homes resulted in a Swiss cheese tax code that left exemptions for most households. The Shanghai taxes of 0.4 or 0.6% of a property's value were only levied on 20,000 properties in their first year, resulting in disappointing revenue numbers and little practical effect on markets. The one way in which China makes buying a home significantly harder is in down payments. The Economic Information Daily reports that Chinese down payments are often double the American rates of 10 to 20%. Recent property restrictions have bumped that number even higher for the purchases of second or third homes. For those, there are often down payments of over 50%. That may seem tough, but for speculative investors who deal in dozens of houses, down payments aren't the obstacle because houses are often bought outright. Chinese netizens have been reacting to the property restrictions with a mix of skepticism and outright recrimination. One poster elaborated on what's called financial repression and how it drives people into real estate markets. Quote, "We can't just hold money because it'll depreciate. We can't stock up on goods or we'll be caught for illegally peddling. We can't play the stock market because it's still volatile and risky. Now experts are demanding ordinary people to quit storing up homes for their children. Another poster called for transparency and accountability in how the government spends proceeds from the taxes. Weibo user Shaizi wrote, "In the U.S., property taxes are actually used for promoting real estate development. Most of the taxes were invested in building better communities and education resources, increasing the property value. But no one knows how the Chinese government might use its gains. Shouldn't that money be used on the people after they were taken from our pockets?" Finally, one Weibo user said that playing around with taxes wouldn't solve the fundamental issues of supply and demand. They wrote, "Commercial housing can be seen as an investment destination, and there shouldn't be policy interventions on just investments. The real problem is the short supply of affordable housing. It's just annoying that people are always passing the buck." Property prices are always a touchy issue, and oftentimes the policies officials claim are designed to bring down prices end up being thrown back in those officials' faces.